Gentlemen, thank you so much. I appreciate you taking time today to be introduced and to maybe give a little bit more detail or instruction about how clients can engage you. My intent is that through this presentation and recording, that clients can get a sense of who you are and what you are, and also whether if they show an interest, what would be the next steps. And for our clients, we would make an introduction, give an overview of their assets and liabilities to see whether or not they would be a good fit if you would be willing to take them on as clientele. But before we get too far ahead of ourselves, I'd like to introduce Brent Smith. Brent is the CIO of Kinsted, Chief Investment Officer. And we've got Daniel Roy. Danny is a portfolio manager in taking care of the client-facing needs and who you'd be engaging with on a regular basis as a client. I thought it was important to highlight these two gentlemen because they are part and parcel of your Kinsted experience. You're going to be the front end and the back end of all the successes that you're about to have. So appreciate you taking time today. Maybe we could just start off with maybe a brief bio or get to know on Brent and just your history's like and how you came to work with Kinsted.
Sure, and thanks for inviting me on to chat with you and hopefully future clients. I think it's always important to understand who is looking after your money, who's making some of the decisions. And I'm not going to go into tremendous detail, but, prior to joining Kinsted Wealth back in 2019, the bulk of my career, about 18 years, was spent with Franklin Templeton, both in Canada and the US. The last probably 6 to 8 years of my life there was I managed a relatively large mutual fund, series of mutual funds for Franklin Templeton in Canada, which was about $8 billion at one point. Then I went down to the US to really head up as a chief investment officer, the multi-asset strategies group for Franklin Templeton globally, where we managed money in Asia, Canada, the US, and Europe. Ultimately, by the time I left, I was overseeing about $40 billion of assets. It's one of the main reasons that I left. I found it increasingly difficult to add value to clients when you are just dealing and operating within the traditional stocks and bonds universe. And most Canadian investors, and in fact, most investors globally are not aware that the investment universe is much, much broader than they are led to believe. And that once you kind of take a step outside of the public markets, the universe is just, the investment universe is just massive. And before I stop, I'll say that one of the reasons why we really expanded and changed our investment platform was because if you look over the next decade at traditional assets, it's not going to overwhelm you with expected returns, and so you really do have to embrace the non-public markets to deliver, I think, really outstanding returns with lower risk to our clients. Essentially, what we're doing is we're just embracing what the smart money has been doing for decades. The smart money is, the Canadian Pension Plan, Yale Endowment, Harvard Endowment, and very large, ultra high net worth, sophisticated investors. They've been doing this for years. So ultimately, we asked ourselves if it's good enough to embrace the non-public markets for the Canadian Pension Plan or the Harvard Endowment Fund, isn't it good enough for just average Canadian investors? And the answer is absolutely, it should be. So at that, I'll hand it over to Danny to introduce himself.
Thanks, Brent. Thanks, Mike. Thank you for the introduction. Yeah, my name's Danny Roy. I'm a wealth counselor at Kinsted Wealth. I've been in the industry for about 9 years now. Was at the various big banks before leaving them to join Kinsted. And part of my departure away from the traditional banking finance system is really there's better options out there, and those better options that we can put investments in our client portfolios, I found at Kinsted. See, at a bank, one of my biggest beef is with them is they have a brand and they have a shelf of products, and their funds are their funds, and the clients that you have, we put into the branded funds. But what if I wanted to step outside of the box? What if I wanted to do something customized or something different? What if they weren't the best in that particular strategy? Well, we kind of had our hands tied. And so part of the allure of Kinsted is not only, like Brent said, we follow the smart money, but we're not beholden to any brand. We'll work with even our competitors if it's what's going to be what's in our client's best interest. See, our founders at Kinsted, they left the banks too, and they left because they knew that there was a better way to manage their clients' money. They wanted to have their clients' money managed the way that they would like to have their own money managed. And so with that core philosophy, we set out to build an investment firm and a platform that was going to incorporate that. We'll touch later on some of those the details of like how we were able to do it, but we first needed to set ourselves up different from the competition. And one of the big differentiators that we have at Kinsted is that we're discretionary money managers. You know, at the bank and other financial firms, insurance companies, what have you, mutual fund companies, they have a different license. They have a licensing that is not always discretionary. They don't have the freedom, the flexibility to go and make tailored, customized solutions for their clients. They have to play in that sandbox of investment choices. Being a discretionary money manager, we have the doors wide open. There's a lot more trust that's placed in there. The fiduciary duty that we have to our clients is a higher fiduciary duty. We have a legal fiduciary duty, whereas 90% of the industry, they have a moral fiduciary duty. They ought to act in their client's best interest, but that higher level that we take on, we take also very seriously. So it's coming from that perspective of having, you know, the right discretionary money management combined with the right investment platform, we feel that we have a really amazing opportunity for our clients to really have their portfolios excel, you know, and meet their goals.
I appreciate that you brought up the topic of fiduciary, because that's a key differential, I think, for anybody who's managing money, that they have both a moral obligation, but also a legal obligation to do what's right for the client as discussed with the client. And that's always a key, that having clients understand what their situation is, having that reviewed appropriately, and then getting a true sense of what their expectations are, and then meeting those expectations with an appropriate portfolio structure is key. I think a lot of my commentary is that I think a lot of people are upset when they read the marketing material associated with an investment, and then their individual experience is much different. Mm-hmm. And so having those expectations met is one part of the solution, but the other part is making sure that those expectations are well documented and well positioned, so that the client can take the responsibility for setting the table. And then also, it's almost like, I would call it almost like a buffet. You're going to put it out. You're going to say, what are you hungry for? What are you looking for? What are you allergic to? Right? And you're going to create something in front, and then it's up to them to give the, okay, yeah, that looks good to me, you know? And my only advice would be, don't fill up on bread, because there's really good stuff coming, right? Really good stuff.
I like that analogy.
Okay, fair enough. I must have skipped breakfast because I'm hungry now. That's
Yeah.
okay. I appreciate that. So maybe as a fiduciary, you're registered nationally as part of that process.
Mhm.
And what does a fiduciary actually require?
Well, part of our licensing with that fiduciary duty is what it looks like is we are required to at least meet annually with our clients. We draft an investment policy statement. Let me back up. Because we have a higher level of oversight and a higher duty to care to our clients, that responsibility is also increased. And so we need to do what I call a lot of heavy lifting up front. We want to get to know our clients because typically the clients who use discretionary money managers are clients who, wouldn't want to manage their money themselves, don't have the time to manage themselves, and they just want to leave that up to a professional to go and to do that for them. And so we take that very seriously. So by getting to know our clients thoroughly, what their risk tolerances, return objectives, what their retirement goals are, what's their time horizon. By knowing all of those factors, we can then draft an investment policy statement, which is sort of like the guidelines or the blueprint or the plan of how we will manage the client's assets and what's going to get them from point A to point B with the least amount of risk or least amount of volatility in their portfolio. It's written in such a way that if the wealth counselor was ever to be replaced, another wealth counselor could pick up the IPS, investment policy statement, read it, and know exactly what the client needs. And so coming from that perspective of knowing what our clients' needs are, we're able to go and implement the appropriate solutions. And we're not incentivized to go and take on more investment risk than ought to, because that's outlined in the investment policy statement. So we meet at least annually with our clients. We review the investment policy statement. We administer risk tolerance questionnaires at least annually. We want to make sure that we're up to date with their financial situation. So this is where Genco partners well with us because they know a lot of that information. They have done maybe a financial plan. They have done insurance needs analysis, and they can work with us to go and get a holistic financial picture of the clients. And this is really what it means to have a legal fiduciary duty for your clients.
Perfect. Okay. I understand that. Maybe one of the things that frustrates me, if I'm going to go along the food analogy, is that if I go to a steakhouse, high-end steakhouse,
Mm-hmm.
and I enjoy my meal thoroughly, and I then have a hankering for steak again, and I go to my local supermarket, Save-On or Sobeys or any of those places, and I get a cut of meat and pay a premium price to get it, it doesn't taste the same. It's not the same. It's like it's a different material or something along those lines. It's still steak, but it has a different flavor to it. It has a different texture to it. It has a different, I'm just getting better bang for my buck sometimes when I go to that steakhouse, even though I know I'm overpaying sometimes for that steak. So there's two things out of that question. The first is, where do you get your steak? You just go to the retail market like I have to do, or do you go to the private market and get the choice pieces of meat?
I think I'll handle that one. I love your analogies, Mike, because I haven't had breakfast either. So
okay.
That is a great question. And I'm not going to lie. We do have public market, right? I mean, we do have public equities. I think that there's a need for public equities in everyone's portfolio. It does provide liquidity. But where, the question is, where do we go shopping, I guess, for our alternative strategies or non-public strategies? Most of the firms that we deal with are very large US and Canadian institutions that only deal with large institutions. They don't have a retail presence. Most of these are not what Canadians would refer to as the exempt market dealer space, where you can invest in an alternative for $25,000. The strategies, for the most part, that we are looking at tend to be, 5 to 10 million US dollar minimums. In fact, we had a discussion the other day with a firm where their minimum investment is $25 million. So they cater specifically to very large institutions. And so why we like that is because, if the Canadian pension plan is investing in a strategy that we're investing in, we feel pretty comfortable with that. If the Ontario Investment Management Corp has invested $250 million in an investment that we've committed $10 million to, we feel pretty confident in that investment strategy. One of the strategies we looked at recently that we'll probably invest in, it was the anchor investor was the Caisse de dépôt de Québec, which is a very, very large institution out of Quebec, and they invested $300 million in this investment strategy. So most of the what we call limited partnerships that we invest in are from very large US and Canadian institutions. Think Brookfield. Yes, Brookfield has a number of publicly traded investment strategies, but we focus mostly on their private investments that are very, very hard to invest in if you're just an investor like myself. Most of us cannot commit $10 million to an investment. And just to get into the investment structure, most of our we're structured. I would say that our investment platform is pretty simple. It's a number of pools. And the reason that we've set it up that way is because the pool has to be the accredited investor. You're not going to see a line item on your statement that shows that you've invested in the Brookfield Global Transition Fund with a minimum $10 million. The only way that we can provide our clients with exposure to these assets is through a pool structure where the pool is the accredited investor, and thus you're getting exposure to these very high quality institutional investments. So again, we're always looking at, and it's not just the US and Canada. We've got some relationships with some European-based private investment firms as well. So we're always scouring the world and looking for investments that really provide, we think, outsized or outstanding risk-adjusted return opportunities.
So hey, can I add something before you jump in here, Mike?
Yeah,
to go along with that steak analogy again, there's another aspect too, kind of touching on what I said earlier. I love to cook, but not everyone does, right? So even if you do buy that, say premium steak from the superstore, you're not going to be getting the same cooking experience because you don't have a chef, right? You're not a chef, so that's really why you're hiring us. Kinsted gets to act as the chef, or we get trained by the other large institutional chefs that we've had long-standing relationships with. We're part of the chef's club, and so you get a steak that tastes the way a proper steak should, versus if you slapped it on the grill.
Perfect. Okay, I understand that. Thanks for making the analogy clear. So essentially, I can, instead of buying from the retail supermarket, I can ask you to order me a steak.
That's a good analogy. Yeah.
Okay, awesome.
Yeah.
If I go back to maybe some of the pool questions, maybe we can take a break in a few minutes here and just zero in on how some of those pools work and what they look like. And we'll do that maybe in a second segment here. But I do appreciate the fact that, how much are you going to charge me for that steak?
Well, I'll definitely let Danny handle that.
Yeah, sure.
I'm not the client-facing guy. And before Danny goes into this, I should preface this for your clients and future clients that everyone at Kinsted invests in our own pools,
right?
And we still pay a management fee ourselves. So.
Right.
And I do, I'll let Danny speak in a second here, but I think, honestly, I believe a lot of the firms like Questrade, which is focused, which has gotten investors to focus strictly on fees. I think that they've done a disservice, and I should qualify that. I think if you're just investing in ETFs and just getting passive exposure to an index, that's fine. Look for the cheapest fees that you can, but when we're talking about a lot of our private investments where big, large institutions see value in paying 1.1% to access that, there's value there. So I would encourage people to not just think about the fee, but the value that you're getting for that fee. When we're talking about certain strategies that we're targeting, where the manager is targeting an 18% plus net internal rate of return, what are you willing to pay for that? Right. And I would encourage people to look at those fees and the value that they're getting for that.
So a difference between Wagyu beef and round chuck.
I was going to throw out Wagyu beef. And you're absolutely right.
Okay, I get it.
Absolutely.
But if I can get that Wagyu beef at a reasonable cost, the more I buy, the lower the cost. Is that true?
Yeah, it's like I love the food analogy. We'll continue on with it.
Okay.
Yeah. So our fees are based on a waterfall declining fee structure. So the more assets you have with us at Kinsted, the lower your fees ultimately are. And we do this for a number of reasons. We also household a lot of fees. So a lot of times we have multiple generations. We have, grandparents, parents, and then grandkids who are often have investment accounts with us. And so we household all of the family relationships together so that they combined their assets under management to reduce fees for everybody. We don't disclose what everyone else has in the family relationship, only that they take part and share in that family discount, I guess you could say, on fees. But our fees are based on the assets under management. So the more assets you have, the same percentage is going to be there, but it will decline with increasing assets. So with Genco and Kinsted, our asset management fee is 1.7, which we feel is very reasonable. And we split that, we share that between Genco and Kinsted. We do that for a number of reasons. The biggest reason is to reduce conflicts of interest, because if we were set up differently, and a lot of the industry is, I might be swayed as a portfolio manager to put clients into a portfolio that may pay me a higher commission. By doing it this way, by having management fees charged on an assets under management basis, it eliminates that or significantly reduces that, because you could be a very conservative investor or a very ultra aggressive investor. It doesn't make a difference to us at the firm. Your fees are based on how much money you have with us. So I'm not incentivized to put you in a more aggressive growth fund if that's not what you need, because my commissions are the same. The fees are the same. And this is, this is best practice in the industry. You want to have somebody who is impartial and unbiased and free from these conflicts of interest. So by setting up our management fee structure this way, we feel that we've done that.
All right. So Genco works with a lot of different advisors because we're actually a producer group. So we're just a loose affiliation of like-minded people. And I was actually explaining this to other advisors, and they can't get their head around how we operate, because they say, well, wait a second, I'm getting all this extra value and I can pull from all these different resources. And how did you get a relationship and all the rest of it? And realistically, we partner with like-minded individuals that actually have a client focus, and that's really our mandate. And so where we don't carry licenses in a particular area where the client would have an interest or benefit from, we'll partner with those groups as long as they meet our criteria of putting the client first. And I appreciate that Kinsted has already built that infrastructure for themselves and maintains that. I'm also very thankful that you guys do have cascading fee structure, because if I have a family pack of steaks and I get that discount, that's fine. But I don't want my wife to know that my steak is bigger than hers. So that's kind of nice that I get the volume discount of fees and get the benefit of that, but I still get to keep my privacy. So I appreciate that a great deal. I do want to say, talk a little bit about how we relate to each other, and maybe how we make a proper introduction, and what's for clients that are interested in learning more about you and learning more about the process of getting connected to you. I would think that it'd be okay with you if we made an introduction through email and phone or Zoom, and have an initial discussion. Once we see that the client has an interest and they fit the criteria, and make sure that that's appropriate for their situation, then we're more than happy to make that introduction, and then we'll leave it up to Kinsted to see if that's a client that they wish to take on. And I appreciate you making room for our clientele, people who have interest. I appreciate the fact that you took the time to learn how we operate, and that we do put our clients first, and that we make sure that they get the best opportunities that their situation can afford them, not just for the present, but also for the future. And that's something that's very keen on our list of things to do for the client. And it's what our clients appreciate most about us. So thank you for that. And thank you for participating in today's first part. Stay tuned for second part too. Thank you.
Thanks, Mike.